And we are live. Okay, I wanted to show you another way to enter orders. We've talked about how to enter orders, how to exit orders, how to have an OCO, one cancels the other. This one is going to be a little bit different. And as we delve into the depths of Thinkorswim, and that's how these platforms work. Right? They didn't start this way. They build on top of each other. And and that's not a bad thing. But there is a way to do stuff. And this will specifically be for either those that have something else to do, can't be at their desk, or have an actual life, unlike the rest of us that are sitting here watching the screen 24 hours a day. But this is going to be an order entry that puts in a bid, puts in a stop, trailing or hard or whatever, and puts on an offer all at the same time. So I'll just call it a trigger. Okay, so like I said, I moved the projection over here because I'm on a sim platform. I'm on a sim platform because I don't want to actually transact this because we're not making an actual trade. But let's just say, okay, we, for whatever reason, and I have Square up here, something that we trade often, and let's just say that we're looking at the actually, if these guys could actually get something between 81 and 85, that would be really nice. They'll list it in the next day or two, but I realize. But it would be nice. More than $4 in between the strikes. But let's just say that we're going to trade the 81 calls. I want to buy the 81 calls. If I get filled, I want to put let's just say a trailing stop. It could be a regular stop limit, whatever you want to do. And I want to put out an offer because I know that I am going to be in this conference call that I am dreading for the next 3 hours. And if something happens to Square, if I get in, and then I need to manage my risk. Okay, so let's just say that we're going here. We're going to buy the 81 calls. And let's just say that we're going to buy them for, close to the bid, 182. Okay, great. Now, oftentimes we'll put in an OCO with the stop. Right? We always want to define our risk. Well, you've heard me how many freaking times? Everybody's a genius at managing winners. We don't have to worry about that. We have to worry about managing risk. Okay, so I want to buy these at 182. But if you're here and you say, first triggers all. Now, I'm going to put in an opposite order. I'm going to put in a trailing stop of, let's just say, 50 cents. Remember, this is arbitrary. This is not an actual signal. And then also at the same time, I want to duplicate that, and I want to put a limit out there of, let's just say 275. Again, arbitrary. This is just so what this says is that if we get filled at 182, immediately I want to put in a 50-cent trailing stop, which will put us in at a trailing stop of 132, ideally. And then I want to offer this out at 275. So let's do this first. And so these are the three things that need to happen. Now we can go over to the monitor and we can look, and it says, okay, I'm working my 182 bid. It's trading 187, so obviously I'm not filled. If that happens, I want to put in a 50-cent trailing stop, and we'll do this. Like I said, this is a simulated. This is sim trading. So if we get hit on something, I'm not too worried. We actually might get hit on these 182s. And at the same time, when this goes in, when this gets filled, this gets hit, this gets hit. So now that I've set that up, obviously we don't ever go into the market, just a market order. But since this is a sim, I'm going to say, you know what? Let's just go to the market with this, just so we see what happens. Okay, so you hear my fill. Get that off the... Let's go look at what happened. Okay, I filled at 189. At the same time, now I have my 50-cent trail stop in, and I have my 275 limit out there. Now realize that these are not OCO. So if I get filled on either side of this, I got to be very careful to go and cancel the other side of it. I don't want to sell it at 275 and trade down to 136 again, and then suddenly I'm short. But that's a way to at least get yourself to a place where you can walk away from your desk for a few minutes. Remember, I don't like walking away with risk on. So that's it. And like I said, this is just me playing around with the platform. So you can see my fill down here. I have my 136 stop in there, trading 181. Remember, I was not advocating buying this. It was just an example. And then I have a 275 limit out there. So now if I want out, well, then I just go here and I say, you know what? Create the opposite order, get out at the market, which we would never do, but I'm doing it now. All right, now I'm out there, but potentially I still have risk on, right? Because I got two orders out there. I got a 275 limit and a stop out there. Cancel, cancel. That's it. So that's a way for you to at least stay engaged if you have to leave for a little while. I'm not saying that this is a set it and forget it, and you can just go about your day, but it's a way that if you have to get up for a little bit, which we know that we have to, it's a way to have kind of a three-pronged approach to risk. I get filled, I have an offer out there, I have my stop. It's not designed to make me be out there for 4 hours. No, Walter, you won't see it. You won't see it until the video, because I'm not projecting from here. Okay, so this is a relatively short video. It's, well, 8 minutes. But let's get back to what we were up to, which we're having a fine day. I'm not gonna... We're doing okay. Largely things have gone sideways. But let me stop this video, get it rendered, and get it out to you.